Um, and finally, this might seem a little bit off topic, but I received an email from a dear friend of mine who is a mortgage professional, and I'm not talking about a loan officer. He's kind of in the job of determining what interest rates are on loans and that sort of thing. And he wrote me, and he asked me what my opinion was, what happened with the mortgage mess, what actually caused that. And I wrote to him because I ran several mortgage companies for a number of years. And I wrote to him, and this is, I think, the major reasons. And first off, who is responsible for the mortgage mess? And I guarantee you, it's everybody. There's not one person or organization involved. Let's start with the borrowers who now claim today that they had no idea what they were getting themselves into. No idea, didn't understand it. Should have never executed the loan documents unless you understood what you were signing. I think that is an awful slippery slope when they say, well, we didn't understand what we did. Secondly, the mortgage brokers. There are some very ethical and honest mortgage brokers out there, and they've been given a very bad hand on this whole thing. But conversely, there was also a lot of basically used car salesmen also in the business. And they loved a particular type of loan called, we called it a liar's loan in the business, but essentially a stated income mortgage. These were mortgages, I mean, people were claiming, the brokers say they didn't do it. I think some did. But basically a stated income loan is they just wrote down what you made and made the numbers fit so you qualified. I mean, how can a waitress make $8,000 a month? Maybe there's a few out there, but doggone damn few of them. And it was not only a stated income which was meant for self-employed people, but that changed to where they would offer people, even on Social Security, a stated income loan. It was absolutely nuts. But mortgage brokers love these loans, and they were under a lot of pressure to get them closed. Appraisers colluded with everybody else. They got paid a lot of money, $400 or $500 per appraisal, and they had mortgage companies ordering dozens of appraisals every week. Of course they're going to listen to who feeds them, and so they got pressured to increase values and inflate values on properties all the time. But they were complacent in the fact they were making a lot of money off these appraisals. You do 5-6 appraisals every single day, $300, $500, even as high as $800 a pop. You do the math. You're making a whole lot of money on that. Realtors were obviously involved in this mess as well. You ask a realtor, when do you think would be a good time to buy a house? Today, right now. It's always a great time to buy. Even if the market is bailing out on you, it's a great time to buy, according to realtors. And they pushed, and they shoved, and they cajoled to get deals closed that made absolutely no sense. Bankers, mortgage bankers, these are the guys who buy the mortgages or underwrite the loans that the mortgage brokers send them. They get paid what's called a yield spread premium. If the interest rate from their buyer is 7% and they sell it at 8%, they make a big chunk of change on that, and they can make several $1,000s on every loan file. So it only made sense that they were going to push through as many loans as they could in order to make all the millions and millions of dollars in those premiums, yield premiums, as well as their underwriting fees and all their other junk fees that they charge. Some of these companies were charging, $1,000, $2,000 in junk fees in addition to the premiums they were getting when they in turn sold the loan to someone else. And finally, hedge funds. They're the ones who, whenever they sell these mortgage-backed securities, took a nice fee. These guys from Wall Street were making hundreds of millions of dollars in fees every year off these loans. So you could say that this is the reason why the mortgage meltdown happened. But there is also another, and I think more insidious reason that a lot of people don't discuss, and that is that mortgage loans have also been a bright, shining example of social engineering. I've seen personally the government come in to the mortgage industry and say, we want more mortgages made to minorities. We want more mortgages and home ownership to be made more to low-income families. You must meet these certain targets. You must do this. You must do that. And in order to do that, something had to give. And you know what that was? They lowered the bar. The bar was constantly being lowered to home ownership. Now, at any given time, there is a percentage of the population, for whatever reason, cannot qualify a mortgage loan, may never qualify for a mortgage loan. But yet, the government and their pressure with politicians, special interest groups, screaming for more and more home ownership for these groups of people could only mean one thing, that the bar got lowered and more people that had no business buying a home got into the game. So at the end of the day, it's social engineering and greed. Pure and simple. There is no other explanation for it. We thank you for joining the Frugal Technology Show this week. As always, we love having you. Feel free to visit our website, www.frugal, that's FRUGAL brothers.com. And don't forget our new community site, the FrugalTech Show, all one word, .com. Come and join us. Come check us out. Enjoy the articles. Feel free to contribute to the comments. We're just getting ready to open up a new forum on that. We always enjoy having you. Hey, I'm Bruce Naylor, your Frugal Tech, and remember, if it's in your shop and it's not making you money or saving you money, it shouldn't be there. Hey, see you later.